Hello and welcome to the week ahead from the Financial Times in London. These are the big stories we'll be following in the coming days. The US presidential race turns to Indiana State. We'll get a health check on the global steel industry when ArcelorMittal reports first quarter results. And we'll have a series of economic data on manufacturing and US employment. First to Indiana, which has become a crucial battleground in the Republican presidential nomination race. Frontrunner Donald Trump recently declared, "If we win Indiana, it's over." And pundits tend to agree with the business mogul. If Mr. Trump wins the Indiana primary, it will be increasingly difficult to stop him from securing the delegates necessary to win the Republican nomination outright and to avoid a contested convention. But his chief rival, Texas Senator Ted Cruz, is still hoping he can deliver an upset win that keeps him in the race.
Together, the people of Indiana are going to send a powerful signal to the media, a powerful signal to the Washington establishment that the chosen candidates of Washington, the chosen candidates of big money and the lobbyists, they are not going to decide the Republican nominee. It is going to be we the people.
On the Democratic side, Bernie Sanders has fighting words for the Republican candidates trying to secure their party's nomination and reach the White House.
If you take a hard look at the Republican agenda, it is hard to imagine anybody voting for that agenda. In a country in which 47 million people are living in poverty, billionaires like Donald Trump do not need tax breaks.
But for the Vermont senator, the race is all but over after Hillary Clinton won 4 out of 5 states last week. Mr. Sanders has vowed to fight on, though, in an effort to shape Democratic Party policies. Now to the global steel industry, which has seen a sharp fall in the price of the metal because of oversupply. ArcelorMittal, the world's biggest steel producer by tonnage, is set to report first quarter results. The company had a record $7.9 billion loss in 2015, and last month it tapped shareholders for $3 billion through a rights issue to reduce its debt. Lakshmi Mittal, its chief executive, recently said the market had hit a bottom. Our industry correspondent Michael Pooler says the results will provide a useful snapshot of trading conditions.
Investors will be paying close attention to what ArcelorMittal has to say about the wider steel market. A collapse in steel prices over the past couple of years has hit producers all around the world, and this has been linked to China, which makes around half of the world's steel. China's consumption of steel, however, has reduced in the past couple of years as it experiences a slowdown in construction. Beijing has committed to dealing with its industrial overcapacity by closing factories. However, there are concerns about whether it will follow through and if the pace will be quick enough. Some of the consequences of the glut in steel globally and the collapse in prices has been seen in the UK, where Tata Steel, the Indian group, wants to sell its factories.
And finally, economic activity indicators for April are out this week for the US, China, and the UK. Services figures from China are published on Tuesday and are likely to show contraction easing. In the UK, purchasing managers' indices will be mixed, with manufacturing growth showing a slight pickup as exporters receive a boost from weaker sterling, while service sector growth is expected to dip. And in the US, we'll also have employment data out on Friday. Non-farm payrolls for April are likely to show growth remaining firm with 200,000 jobs added, while earnings growth and the unemployment rate should show little change. Our economics editor Chris Giles explains how this data might affect the Federal Reserve's decision on interest rates.
After really weak figures for the US economy in the first quarter, which came out last week, this week I really think we're looking for the PMI figures to see whether the US economy right now is growing faster, both in the service sector and in manufacturing, and also the non-farm payrolls to see whether the US economy is creating jobs. If it is, then I think that's the most important thing for whether the Federal Reserve ultimately will feel comfortable that the weakness at the start of the year, the global weakness, is really gone, and therefore they can think again about raising interest rates quite soon. They indicated last week that it might be as early as June or July.
And that's what the week ahead looks like from the Financial Times in London.